Hello. Hello guys, I hope you guys are doing well. So this will be the 21st webinar in our series of trading opportunities webinar. Let's first quickly check audio at my end. Alright, so looks like it is working fine for me. I'll wait for a few moments here so that if anybody else is waiting to join this live event, they can join in. And also for those of you who are already live with me, kindly tell me if the audio and video both are clear at your end. So it looks like Steve is saying that audio video are good, and UK Trader is saying hello, good day. Hi Duke. So in that case, let's begin our webinar with the legalities here. Let me quickly load up the disclaimer here on screen. So guys, here's the disclaimer suggesting that all content presented here is purely for educational purposes. I'm not soliciting buy or sell. If you do want to use the views presented here for your trading, investing, or for any other purposes, you yourselves will be liable for your profit, loss, or loss of profit, or any other situation that might arise from those actions. So that will be the quick disclaimer. Let's move ahead. And yes, you can obviously read the rest here on screen. So now that we are done with the legalities, let me give you a quick introduction. So my name is Neerav Yadav, and I'm the admin and owner of 50 Eyes Market Analysis, which is a website where I have been presenting my views on global markets, including stocks, commodities, indices, cryptos, etc., and obviously Forex for 7+ years now. And I also run a YouTube channel with the same name, 50 Eyes Market Analysis. And this broadcast, which is going live, it is going live on both my YouTube channel as well as the TradingView account that I have, right? So in case you want to check this recording later on, you can head over to my YouTube channel, 50 Eyes Market Analysis. At the rate of 50 Eyes is the handle I have. And check this recording 21st here, or the past recordings 20, 19, 18, etc., right? Apart from this YouTube channel, other contributions in the field of trading, I also have the book Think with the Markets: Secrets to Achieve 80% plus accuracy using Elliott Wave. It is available on Kindle for instant access if you are interested in learning more about my methods. Moving forward, I also have a video course, personal classes called Training Program LT, for which we will be holding a new batch this year and this month. And that's the plan. And furthermore, about my work, before we move on to the actual webinar, the most important thing which I want to show off is that for these 6+ years, I have kept track record of all the analysis and webinars that I have done. As you can see, in 2016, our accuracy was 83.34%. In 2017, it was 87.5, as you can see over here, right? So these are all the instruments that were discussed, the analysis on these instruments, and what happened after the analysis. So you can check it anytime you want. And the link for the videos is over here. Going forward, 2018, we had an accuracy of 84.61. 2019, we had an accuracy of 84.88%, right? And 2020, 88.52. And the last year, which we have so far on the record, 2021, is 82.22. We have not yet had the time to compile the 2022, but I'm showing it off because 6 years consecutively 80% plus is an industry record, because generally even 60% plus is considered very high in this field. That was about all for the introduction. Let's head over to the analysis. So the way we will proceed with the webinar is we will first of all go over the chart of Euro USD, followed by EURCAD, USDJPY, EURJPY, Crude, Gold, S&P, Nifty, and then BDC. Right. Every time I discuss a complete chart of an instrument, I'll ask you guys if you have any doubts. If you have, you can type that in the comment section. If not, just type in understood or clear so that we know everybody is on the same page and we can move further. Right. And just a heads up, these webinars are connected live on every Monday, Wednesday, and Friday at 2 p.m. GMT. Okay. In the last webinars, we had caught the last 2-3 recent webinars, we had caught the downside movement in USDJPY and EURJPY, right? And overall, in the last 3 weeks, we have got 13 plus trades. Those are the major movements I'm talking about, not the minor movements. If we count the minor moves which we have caught, it will be much higher number. So that's about it for that. Let me just remove it and start off. One final confirmation, if anybody can give me, of the audio and video anywhere on YouTube or TradingView, it would be nice. One final confirmation. Well, at least at my end, it's looking good. So let's first of all check out the chart of Euro USD, which is on screen, and it has sort of done what we were planning to. Thank you for the confirmation, Duke. It has sort of done what we were planning or expecting to seeing on this counter, right? So if you guys recall, or if you have been following my past analysis, by the way, guys, my area of expertise is Elliott Wave, so I'll be discussing in Elliott Wave patterns and terminologies. But if you are not familiar with all that, just keep watching and I'll discuss the basics so you can still follow along. It's not an issue. Anyways, our starting point or point of reference for this analysis has been this level around 28 September and the price around 0.95342. We were expecting that this market is following this kind of pattern, right? So if you guys can follow along on the right hand side, I'll draw the rough structure for this pattern. First leg up is called a W, next leg up is called a Y and a Z, and every connecting wave is called an X. So the thing is that after this pattern completes, we expect the market to fall generally in a with bit more of strength. But in this particular case, it has sort of just given a zigzag kind of move or a flat kind of move, which is not necessarily representing any kind of a big movement. So it is possible that this count is incorrect, right? Although it is still followed, because after the Z, as I said, we expect a bigger leg down. So it has given a leg down, but it is not big. So the best strategy here is to just wait. Most likely we will have to update the whole count. I already have the updated view, but we will discuss it once it's triggered. So in this case, the most important thing to follow along is that if the market takes out the last high 1.07340, then it's in my understanding along with the stop loss at the last or the most recent low. If it goes straight up from here, then I am expecting that the market will continue further with the technical stop placed over here. So that's my take on Euro USD, at least as of now, right? And if the market is following the count which we have just discussed, then it should continue downwards. And for that, we don't have to do anything. We must first wait and see a bigger fall, which will sort of confirm our bias that this count is correct. And once the count is correct, we can then add on later on. First the confirmation and then the trade comes in, right? Unless you are aggressive trader and would like to do things differently. So Euro USD, basically a wait and watch with the upside trade discussed. Nothing new to add here. It's sort of following what we have been discussing for the last few webinars. I'll wait for a few moments before we move ahead with EURCAD. Guys, type in understood or clear if you have understood whatever we were discussing. So next chart here on screen is of EURCAD, and as you can see over here, last time when we were discussing it, I mentioned rather clearly that downside is still open, and this was our target 1 by the way, and this is our target 2. So downside was still open for target 2, and the setup was that if it goes below the orange trend line or channel line, whatever you would call, then this will be what you call initiation for possible shorts with stop loss at last swing high. So it has done that. So basically it's still on, the trade is still on for downside, right? And the target minimum is over here. So in this particular case, this becomes a, and 6 is, that's a very good risk to reward, but the ideal entries are generally not what we could capture. So around 3 is to 1, but as I said so many times in these webinars, you need to trail the profits once you are in them, and risk to reward doesn't really matter. If you can capture part of the bigger move, that's what we are all about in trading. So anywho's in this trade, we are still short here, and targets are clear, stop losses is clear, stop loss is clear, and pretty much just trail it. Nothing new to add here. It could still have one leg up remaining, so it is possible your trail will get hit and then it still proceeds down, in which case a re-entry is required, because there is a possibility that this is the wave X still in play. So that's about it for our discussion on EURCAD. I'll wait again for a few moments. I see people are online. But as I said, responding to what we are discussing, if you are understanding it or not, is also important, because we are doing a webinar here, right? So we'll appreciate responses from you guys. Steve here on YouTube and Duke Trader on TradingView. Anyways, next chart which we will discuss is USDJPY. I think that pretty much should be the updated view. Okay, so let's move ahead with the USDJPY. This is the chart we are following. Okay, now again, this one also we captured the whole fall. If you guys have been following the 2-3 of the last webinars, we were able to capture this leg down, right? And our targets were, target minimum was this low of wave A, which it has obviously achieved. As you can see, this was our target minimum. And the next target was the violet looking line lower. So roughly this much of the moment we have captured, give or take a few, because not everybody can take the exact entry. So that's just the way this business is. So anyways, proceeding with the situation at hand, the next immediate target comes out to be 129.046, roughly speaking. So this violet line basically. So it is still possible that this market might continue towards the downward side, right? At the same time, because we have already seen a very big move, it will be better to book partial profits here, right? Because although we expect that the wave C can still have one more leg down remaining, but it is also possible that it's complete here. There is no real requirement that C will touch our next target. It has already touched the minimum target. So that in itself is good enough. It was a big move in my understanding. So that's about it for USDJPY. Move your trails, book partials if you were able to catch it. If you were not able to catch it when we first predicted it, then you need to attend these webinars live. Okay, because sometimes, not sometimes, many times the trades they just take place right after our discussion over here. Okay, so anyways, USDJPY, that's it. If you were in the shorts, keep holding them with trails, but after booking partials, obviously. Nothing new to add here. It has followed our plan precisely, and it's now time to move to next one, EURJPY. So, Zemkopalo, the gold chart will be discussed after EURJPY and crude oil. So, two more charts before we head over to gold. And in the meantime, guys who are live here, let me know if you are able to understand our plan. And yes, more importantly, if any of you who are viewing was able to capture this movement down when we first discussed it in the last to last live webinar, I would appreciate if you can point that out in the comment section so that other viewers can see. So that was it for USDJPY. Let's head over to Euro JPY, which again is a chart which is following our analysis perfectly. So this one also, if you have been following my webinars, we caught the fall right here at the break of the red parallel channel, right? And target minimum again was at 138.834, which was at the last recent low. Okay, so it has already achieved the target minimum, and the next target was or is at 135.984, so which is still open. But again, this is a very big move in itself, and it would not be wise to keep holding this position without booking anything, right? Because analysis can sometimes change, but that does not mean your profit should disappear. Of course, you can risk some skin in the game, keep some skin in the game, but no need to keep the whole thing here. So EURJPY again, it is following our analysis, and we have been able to capture the leg down or the move down from around here, so which is approximately this much. Our target minimum was here, right? So some partial booking over here. When it starts to go against us, again we have to do some partial booking, and whatever remains 10%, 20% of the position, we can just keep holding it, right? So EURJPY is following our plan. Expectation is of still more leg down, but book positions accordingly. Do not hold everything, is my advice. Next up, we'll head over to crude oil, and I'm seeing extremely low participation again here, which is not cool, guys. Makes me think, what if I just record these videos instead of doing them as webinars? So, anyways, it's not like I can force people to comment here, but let's move ahead with our next chart, which will be crude oil followed by gold. So, this is the chart of crude oil, right? Hi, Madhavji. Thank you for the confirmation over there. Let me just quickly see. Okay, so here on crude oil, last time when we discussed this chart, we were of the view that if this market takes out this high, which is this level, then we can expect some upside movement for wave 3, 4, and 5. So basically, we can expect upside movement for this white target region to be touched or the market to enter it. However, what happened was not as we expected. The market did trigger our longs by going above the last high, and then it has sort of reversed, right? Now we will discuss gold. I've not yet discussed it. Just hold on, it's going to be the next chart. So yeah, getting back to the point, what I was saying is that crude oil, it has triggered our longs and then it has gone down considerably. So I am not holding longs as of yet, but the count still holds. That is, the analysis is still holding on for the upside. Okay. So why am I not holding longs? Because this movement has been considerably stronger than what we expect on the downside. We generally don't want to see a movement lower than this level, which is the ABC flat structure, regular one. But this has sort of tried to go into an expanded flat structure. So it is still valid for upside, right? So I will be interested again in upsides when, or longs basically, when this market travels and takes out at least around the 80-ish level, right? So that's my quick update on WTI crude oil. Upside is still valid, but no longs for now because this market is sort of not behaving in the ideal nature which we expected it to behave. That's our updated take on crude oil. So again, Steve, Madhavji, and Remco Palo and Gyuk, if you guys are still online, I would appreciate if you can use the comment section and tell me if you were able to understand this analysis on WTI. Let's move ahead. Gold. So gold, here's a small update here. Last time when we were discussing it, our view was that if it takes out this trend line, one second. Yep. Thank you for the confirmation there, Gyuk and Steve. So anyways, last time when we discussed gold, our view was that there was this trend line and we were of the view that if it breaks lower, then we will be interested in possible shorts. So basically nothing was triggered. No trade has been triggered on gold yet. Yeah, but I would like to point out before I discuss this chart, don't comment something like that, Zemko. Just wait for my analysis to complete. And then if you have doubts, you post them based on the analysis that I'm doing. If you have already gotten a bias, then just trade it. I'm not interested in learning your analysis here. I'm just coming here to share my views. So anyways, getting back to the point over here, what I was saying was that before I discuss this chart, I'll just like to point out that we were able to capture this up leg and this up leg before in the previous webinars, like whichever time the webinars were held in this series of these trading opportunities webinars. As I mentioned, I do them on Monday, Wednesday, and Friday regularly. So we have been consistently catching the movements in this counter, and also this last leg we were able to capture like precisely at the turning point. This whole move we were able to capture till here, right? Sorry, not till here, till here. This much we were able to capture in the last webinars. And why am I mentioning all this? I'm mentioning it just to point out that these webinars are bringing out real trading opportunities in live markets. Generally, these kind of things are inside paid services. So I would expect a little bit more participation, and I would request you guys to share this content once these webinars are complete with your colleagues in your trading groups. If you have Discord or what do you call Slack, Telegram, or something of that sort, and try to share it with at least 3 of your circles, like Twitter, Discord, or Telegram, whatever you have, so that we can have more reach. And do make sure you yourselves are able to attend these webinars live so that you can make the most of these trading opportunities, right? So that is my small request from you guys. Hope you follow with it. And lastly, before we proceed with the analysis, please make sure you hit the like button on YouTube and the rocket button if you are on TradingView. So that's it for my request. And as you can see over here in the analysis, it is sort of self-explanatory here. But for those of you who are not familiar with Elliott Wave, I'll just give you a rough picture of what we are seeing here. We don't need box. So what we see here is that the possible impulsive progression. So in Elliott Wave terminologies, it is labeled as a wave 1 up, 2 down, 3 up, 4 down, and 5th up. So thus far, we have completed the first wave here. And the second wave is also complete. So that means we are in the wave 3. And if this analysis is correct, then there should be a small pullback after it, which should again be followed by one more up leg. So basically, What this means is that whenever this wave 3 completes, it should see a small lag and then another wave up or lag up, right? So if all of this holds up, then that means some upside is remaining, right? And generally wave 3s are the strongest, but that's not always the case. Anyways, we can just check out some of the immediate targets for this movement. Again, guys, this will be coming out very high, very heavy targets for this counter. So we would like to consider the lower levels. Generally, we take 1:1, which is 2005, and 161.8, which is 2133 as the targets, but not getting too much involved with all that, like not predicting the higher levels. The immediate ones are the important ones at this point in time, and the reason is that not always the wave 3 becomes the strongest. So these will be the immediate targets we have on screen here. The first one is 1877, the next one is 1925, right? So basically it will become a sort of trail as it goes up, because I am also noticing something here, and that something is a loss of momentum on this counter. First of all, if this is the expected progression, then you can look at the strength of this leg and the strength of this leg. So it has considerably weakened, so not much point in holding it for the extreme maximum targets, right? So if there is not much point in extreme maximum targets, we want to look for the targets which are nearby. So that's my take on gold. It is inside long territories, like currently we are expecting it to proceed further in the upward direction, and these are the expected targets. By the way, guys, the red line was the minimum expected target to the upside, which it has already done before even did the webinar. So that's my take on gold here. The longs are still on, but remain cautious, right? Technically, the stop loss should be at the wave to low, a little bit above it, right? So a little bit somewhere here, a little higher than 1800, but overall it is still a long. What is the worth? What's today? So I have discussed multiple analysis here. Two of our trades have already followed through. So you need to watch the whole webinar. EURJPY and USDJPY, our trades have already worked out there. Sometimes there are trades, sometimes there are the ones which have already been working. You just have to follow them. So this is again the reason, Zemko Polo, that I say to people, watch every single of these webinars. It's not like every webinar will have a trade, but after 2-3 webinars, you will definitely find some trades which we will discuss, and then we will follow them through. Analysis should have given certs analysis on when you see crude oil going this week. It doesn't matter that analysis went completely wrong with respect to crude oil. What matters is that you should improvise and do analysis. Well, Asan Tariq, I have discussed crude oil, and if it works or doesn't work, it doesn't really matter to me. Losses are part of this game, and I have discussed it in quite detail in my understanding. If you want to look for the higher perspective, we have discussed it in, I think, 10th webinar or something, right? Not everything will go as you want. This is my webinar. If I want to discuss it for 5 minutes, I'll discuss it for 5 minutes, right? Already I see people telling me that these webinars are getting too long. You need to shorten them, Nirav. So what have I got to do, man? I have to take the time out somewhere, right? So let's move ahead with the next chart without wasting any time. And you guys let me know if you were able to understand the analysis on gold instead of typing in lengthy comments about different things. What about just Steve and Motherji on YouTube and others who are on TradingView? I'll just load up the Thai S&P 500. 1 second. Needs a refresh here. Okay, so S&P's 500, last time when we were discussing it, we were of the view that, let me remove everything. So we were of the view that from this point of reference around to 3778, we expected a possible triangle in the making, right? And we were expecting that this was the C and the D, and the up leg, if it crosses above the C high, would lead to a possible buying opportunity, which is exactly what happened. The market did go higher than the C high, right? And then as you can see, it reversed again back into the same price territory. And not only did it reverse back into the same price territory, it reversed rather, what do you call, very strongly. So that needs updation, right? And that also means that something might be going on here which we were not able to catch. Basically, I believe that it was the fact that there was no strong moving factor here. There are some news events which will be going live in about 28 minutes, roughly speaking, from now on. They might be able to guide the direction, but I will not talk fundamentals here. Basically, from an elite wave perspective, what we have over here on screen is this is the updated view. A, B, and we will go over with the C here, the D here, and we expect that the E might be here, right? So if this is our updated count, then that means downside is again still open, right? But given the fact that this market is trying to take out our stops as much as it can, this time it will be better not to take the aggressive setup. The aggressive setup is the break of the BD trend line, right? Instead, we'll go for the more conservative approach, which is the break of the wave below, right? Again, there is no guarantee that even if you take the this less aggressive position, that you will not hit the stops or anything like that. But it does ensure a little bit of what do you call, greater chance of success with a higher risk, of course. So means lesser position sizing. So basically, S&P 500 is a wait and watch with our downside setup at the way break of the 3764-ish levels. Roughly speaking, you just check out what this low is, right? Because that will depend on the chart you are using. I'm currently on the FX data feed. You might be trading directly on the E-mini futures, right? So on there, that will be around 3788. So keep that in mind. Apart from that, I do not think there is much to update here. And even though I'm not a big fan of this triangle count at this point, it is holding its own so far, right? And this price action is also looking a little bit bearish to me. But as I said, we'll wait and see how it goes. We don't have to force anything, at least as of now. This is what we should do in situations where things are not playing out as intended. So S&P, this is our updated view. Nothing more to add here, right? It's basically just that wait and watch for possible selling opportunities. And yes, longs, I will not immediately enter them, but I would like to remain aware if it crosses our immediate high. So if there is any doubts on this counter, we can just check it. Otherwise, we'll move on to the next chart of Nifty 50, which will be followed by BTC. Yes, of course, these news events generally do tend to have the effect of making the move which is supposed to be happening at that time. So for instance, if we are expecting a down move and if the analysis plays out, then there's a heavy chance that it will play out right after the news event. But that's not always the case. That's why I do not pay too much emphasis on news events. Sometimes it will have the opposite effect. That is, the movement is already going on, and when the news event comes in, nothing happens. So basically, the movement has already been accounted for. So that's why we must remain more focused on the price action rather than events which we don't have any control of anyways. So S&P's 500, let's move ahead with the next chart. Yeah, welcome Jill. Next chart will be of Nifty's 50. Let me quickly check. There it is. So Nifty 50 has remained unclear. Last time when we discussed this chart, our view was that, one second. So our view last time on Nifty 50 was that if it crosses higher than this last high, then we can expect this market to be doing something like this. right? And I was personally thinking that it may have completed the low here and should head over to new highs, right, for the wave 3. However, in this particular case, even though the count is still valid as a nested one-to-one deformation, but it is looking very less likely to me, right? Personally, I don't think there is any good reason to wait for longs here until it crosses the last recent high. And as a matter of fact, it may very well just break it to the downside. So I'll just discuss both views. So first of all, the first view is that this market, as I just discussed, this count has become less likely, nested one-to-one deformation, and only we are interested if it crosses above 18243, right? Second outlook is the corrective structure outlook, which we already have discussed in the past few webinars, which suggests that W is here and X is here and Y is here, right? And in that case, if we go further, we can say that the next X is here, which should be followed by a Z leg in the downward direction. So both views are here. Now, the thing to note here is that if this second view which I just discussed is followed, the market is pointing down, and if the first view which I discussed is followed, then the market is pointing straight up. So both are counter to each other. So that means it's more of a wait and watch kind of situation here. For upside, we have a clear setup which is above the break of 10 to 41. Basically, we'll reanalyze the market at that point, but the extremely high likely that if it crosses that high, then it should be a long candidate. As for the short setup, it is still there, right? And we don't have a confirmation as of yet. But I personally think it is a little bit more of a situation where the shorts are a little bit more likely than the longs. So Nifty 50, I would say that unless we see some clear signs of bullishness, which we have mentioned as the crossing of 18 to 40 something level, it is better to, what do you call, keep in mind that shorting. One second. So I was getting a call there. So until we see a clear sign of evidence of bullish movement, it is better to keep in mind that the market is still bearish until proven otherwise. Nothing more to add here. And after this, we'll move on to our last chart of BTC. If you guys had any doubts on this chart, Nifty, you can post that in the comment sections. Please, it's quite hot. So I'm not going to check anything of that sort, Zemco. I have my own way of trading and I have had 80% plus accuracy using the same way for 6 years. I'm a trader first. I do my things my own way. If you want to consider those news events, you check them yourselves. What do you need me to check a news event for? So thank you, Madhaji, for the confirmation here. Let's move ahead with our last chart here. Last chart here would be the chart of BTC. So BTC, nothing really new to add here. It is still following the, basically it is sideways. So we don't seem to be having much to add on this counter. Last time when we discussed, we were saying that it has given a corrective structure here. So because this corrective structure is complete, this market has opened itself for more downside. And I've discussed so many times the targets for immediate downside are 15 to 50-ish levels and 14,800-ish level, right? Next thing it can do other than going straight down is that it can propagate sideways and then go down, or it may go a little bit up before going down. In either case, we are not interested in longs until this market takes out the high of 21,400, 480 something, basically this high, right? So it is still a shorting candidate unless we see a straight move up here. In that case, we will be interested in longs. So that has been the overtake on BTC. Basically, I'm just repeating myself because sometimes new participants join in. Okay, so before I end this webinar, again, I'd like to request you guys to hit the like button on YouTube and the rocket button on TradingView, and please make sure you share it with at least 3 of your contacts who you think will find it useful. We again, just repeating ourselves, we again conduct these webinars Mondays, Wednesdays, and Friday every week at 2 p.m. GMT. So if you would like to join in on the next webinar, you know where to find me. YouTube 50 Eyes Market Analysis is our YouTube channel. And with that, I don't think there is much to add here. Again, the links mentioned in our videos about my book. My video courses can be found on my website. My personal classes, which we'll be running a batch very soon. You can send the inquiries here, and that's about it, guys. You can watch the recording by going to YouTube 50 as market analysis section live. This was webinar number 21. Right, let me check quickly. Yes, good night, Madhavji. EURUSD we have discussed already. You can check it in the recording. So recording, as I said, you can just go to 50 as market analysis and click on number 21. That was it for guys. Thank you for joining in. I hope you are able to share my work and also join in the next time. Talk to you guys later.